Do you still need your bank? Or is Fidelity's Cash Management Account, CMA, simply better than the rest? Hello, Diamond NestEgg members, super savers, and course fans. I hope you're healthy and well. So, between college campus tours with our kids and a trip to Austria to see Marcus's parents recently, the Lammer family has had the chance to fully test out our Fidelity Cash Management Account, or CMA, over the past few weeks. So we thought, what better time than now to give you an update on this topic, especially since we know that some of you have some domestic and or international travel plans coming up in the foreseeable future, where your CMA may come in handy. Here are the 3 topics I'll be covering today. 1. What are the key features of Fidelity's Cash Management Account, or CMA? 2. How can you make sure you're getting the best rate on it? And 3. Should you ditch your bank account for Fidelity's CMA? Let's dive in now, folks. What are the key features of Fidelity's Cash Management Account, or CMA? For those of you new to cash management accounts, CMAs are like a hybrid checking and savings account, usually offered by brokerage companies. Think of it as a separate spending and or savings account that you hold with your broker. Today, we're focusing specifically on Fidelity's Cash Management Account, but Vanguard also offers a CMA that they call the Cash Plus account. And fun fact, cash management accounts have actually been around for decades, with the first one being launched by Merrill Lynch back in 1977. But it took many years before firms like Fidelity and Vanguard popularized CMAs for the wider public. Not all brokerage companies offer cash management accounts, though. Schwab, for example, doesn't have a direct equivalent. Rather, they guide you towards Schwab Bank. Which brings us to an important point. Cash management accounts are not bank accounts, but the ones that we've talked about up to this point in today's video and on this channel are generally FDIC insured. Fidelity's Cash Management Account also is an FDIC insured cash option that offers up to $4 million FDIC insurance. More on this shortly. On their website, we can see the 3 key Fidelity Cash Management Account CMA features highlighted. First, there are no fees or minimum balances. Second, competitive rates. We'll dive deeper into this in the next part of today's discussion. And third, fraud prevention, meaning that you can stay safe from unauthorized account activity with their customer protection guarantee. And if we scroll down, we can see that in addition to competitive rates on your cash and no account fees or minimum balances, Fidelity CMA also has no foreign debit transaction fees, a debit card compatible with digital wallets, and ATM fees reimbursed globally. And I have to say, these 2 are our favorite features because when we travel, we do not have to worry about paying additional charges when withdrawing cash, whether that's US dollars from a domestic bank or the local currency from an international bank when we're overseas. And for those of you who've asked in the past, we did check the exchange rate for international withdrawals with our Fidelity CMA against the normal ATM debit card from our US-based bank. On average, and based on our personal experience from our latest trips, the exchange rate from our normal ATM debit card from our US-based bank was slightly better. But when we added in the foreign transaction and our ATM withdrawal fees that they charge on top, our Fidelity CMA came out the winner every time. Remember, Fidelity CMA doesn't charge extra foreign transaction fees. In addition, Fidelity CMA offers mobile check deposit and bill pay, and complimentary check writing. I've linked this Fidelity CMA page below this video in case you want to dive deeper or open your own cash management account with them, because at the very top of the page, you can just click on this Open an Account button to get things going. Now, let's move on to the next part of today's discussion to ensure that you're earning as much as you can from your Fidelity CMA. How can you make sure you're getting the best rate on it? With the Fidelity Cash Management Account, you can choose to have your funds in their government money market fund, SPACs, which has a 7-day SEC yield of 3.31% at the time of this taping on August 20th, 2026. You can also opt to park your Fidelity CMA funds in their FDIC-insured deposit sweep program, which has a 1.84% APY at the time of this taping. Now, personally, we keep the money in our cash management account in SPACs because, well, it just pays more. But as Fidelity notes on its website, SPACs is a money market fund that gives you access to your cash and may earn a higher return than a traditional checking account. In general, money market funds are invested in short-term, lower-risk securities, which keep price changes relatively small compared with other types of mutual funds. However, an investment in a money market fund is not a bank account and is not insured or guaranteed by the FDIC or any other government agency. Money held in SPACs, as well as any other security held in the Fidelity Cash Management Account, is eligible for SIPC protection of up to $500,000. So, this is something that you need to be comfortable with. If you're not comfortable with this, though, and or if you have more than $500,000 in your Fidelity CMA, then your only other option is to park your funds in their FDIC deposit sweep program. As I mentioned earlier, this option means that your funds are FDIC insured up to $4 million. Fidelity is able to provide this high level of coverage because they automatically transfer or sweep your uninvested cash into program banks. So, for example, if you had $600,000 in your individual Fidelity CMA under their deposit sweep program, Fidelity would spread that $600,000 across 3 or more of the program banks they work with so that they can keep you under the $250,000 FDIC limit per bank. Fidelity has 19 program banks that it works with at the moment. And as you can see from this list, many of these program banks are household names, such as Citibank, the Bank of New York Mellon, Goldman Sachs, Capital One, JP Morgan Chase, and so on. It's important to keep in mind that if you choose the deposit sweep program in your Fidelity CMA for cash balances that exceed FDIC insurance coverage limits, or that cannot be swept to a program bank due to either a lack of bank capacity or unavailability of FDIC insurance, your funds will instead be swept into the money market overflow feature. This basically means that those funds will be held in the Fidelity Government Money Market Fund Class S, FZSXX, and are no longer FDIC insured. So if you're holding significant amounts above the FDIC threshold in your Fidelity CMA under the deposit sweep program, this is something to be aware of. And as a side note, for FZSXX, the 7-day SEC yield stands at 3.31% at the current time, which happens to be exactly the same as SPACs. So, for those of you who already have a cash management account with Fidelity, drop a comment below and let us know. Do you keep your money in SPACs or in the deposit sweep program? And if you don't know, just go to your cash management account and click on Position. That will take you to this detailed page. You can see that my cash is held in the money market fund. In case you want to change this, just click here and the screen will show up underneath with the option to change your position by clicking this button here. So now that you know the key features of Fidelity CMA and understand the difference between holding that money in their government money market fund versus deposit sweep program, let's move on to the next part of today's discussion. Should you ditch your bank account for Fidelity's CMA? Now, as with most things that have to do with money, this is a very personal and individual decision. I really like Fidelity's CMA a lot. Even though SPACs rates have come down as interest rates have come down over the past few years, 3.31% is still okay for the cash that I want to keep liquid and easily accessible. And don't forget, because SPACs holds U.S. government securities in its portfolio, a portion of total ordinary dividends that you receive from SPACs may be state tax exempt. For 2025, which is the latest year that we have numbers for, the percentage of eligible income from U.S. government securities for Fidelity's government money market fund, SPACs, that may have been state tax exempt was 50.9%, depending on your state of residence. Or, let's put it this way. The SPACs yield is better than what I would get in my JP Morgan Chase account. But what I really like about Fidelity CMA is the ability to withdraw cash from anywhere in the world without paying costly ATM and foreign transaction fees. I can't do that with any of my other accounts. However, do note that even though Fidelity doesn't charge foreign transaction fees when you're overseas, some merchants may ask you if you want to pay for your purchase in US dollars. While it might be easier for you to do the math this way, it's typically more expensive. The merchants essentially charge their own exchange rate, which is generally less favorable compared to the Visa exchange rate that applies to foreign transactions with your Fidelity card. For example, if you go to Germany and use your Fidelity Cash Management Account ATM card to pay for something in euros, the exchange rate that Fidelity uses for currency conversion may differ from what you might see, say, in the newspaper or on a currency exchange website. Having said all that, even the competitive rates, lack of ATM and foreign transaction fees, and all the other features that Fidelity CMA offers are not quite enough for me to recommend completely ditching your traditional bank branch just yet. Here are the 3 reasons why we're still hanging on to our more traditional bank account. 1, we like physical branch locations. Now, I do a lot of things online, which shouldn't surprise anyone here, but like many of our Diamond NestEgg regulars, I still like being able to go into a bank branch if I need to, even though I'm probably only in there once or twice a year to get something notarized. It's just nice to know that it's there for those just-in-case special situations. Yes, Fidelity does have some physical branches, but they're few and far between, which means it's not easy if you want to deposit cash directly. I know that many of us have less and less cash that we carry around, but if the ability to make physical deposits is important to you, then Fidelity CMA may not be the best choice. 2, sometimes there are longer hold times on deposits, especially on certain incoming checks and/or ETFs for newer accounts, or when Fidelity systems detect unusual patterns. 3, locked accounts may take some time to unlock. Your account can get locked if a large sum is transferred in, or if it's flagged for some other reason, like potential fraud. With a traditional bank, you can again walk into a branch with your ID and fix whatever went wrong. With your Fidelity CMA, you're stuck on the phone, and sometimes you may have to call back several times over the course of days to get a resolution that is satisfactory. And of course, during that time, you won't be able to access your money. In addition to these 3 reasons, some of our Fidelity fans have also complained that they have issues integrating their Fidelity Cash Management Account with Zelle and other third-party billers. So if you use Zelle and other third-party billers often, then Fidelity's Cash Management Account may also not be ideal. What about you? Are you going to open up a Fidelity Cash Management Account after watching this video? Or if you already have one, what do you like and not like about it? And are you still hanging on to your traditional bank account like we are? Or have you gotten rid of your traditional bank account altogether and just use Fidelity CMA? Drop a comment below and let me, Marcus, and the rest of our community know. All right, Diamond NestEgg members, super savers, and course fans, I hope you enjoyed today's video and learned something new. And as always, if you're interested in continuing the conversations with me, Marcus, and our Diamond NestEgg members on the best rates, investment products, and latest happenings in the market, come on over and join our VIP investment club, where these conversations are happening every day. And just in time to hang out with us on this month's Member Live, happening this Sunday, August 23rd at 5 p.m. Eastern Time, 2 p.m. Pacific Time. Visit our website at www.diamondnestegg.com and click on this yellow Private VIP Investment Club button to learn more. And see you again very soon with more brand new wealth building content for your financial journey.